Welcome everyone to today's AllTranstek webinar titled Mileage Equalization, a Timeline for Reducing Mileage and Increasing Savings. I'm Clayton Slaughter, Senior Analyst with FTR, and I'll be your moderator for today's webinar. Empty mileage penalties increase shippers' expenses. Today we're going to explore why and how railroads charge empty mileage penalties to tank car movements and strategies you can use to avoid costly penalties. This webinar provides a basic knowledge of the equalization process and the mileage rules essential to reducing a car owner's mileage exposure, as well as the timeline to help you meet essential deadlines and a breakdown of mileage equalization reports. We're delighted to be able to bring you today's webinar. As a bit of housekeeping before we get started, I want to let you know that there will be a webinar replay available by this Friday, October the 6th. An email reminder will be sent out once the replay has been posted. The format for today's webinar will be a formal remarks from our speakers. This will then be followed by a question and answer session. The length of this webinar is scheduled for an hour. All of the formal remarks should be completed within about 45 minutes, and this will allow approximately 15 minutes of question and answer. At this point, I'd like to introduce our speakers, and we'll move on to the formal presentation. Joining me today is the distinguished Denora Guzman, Car Accounting Manager with AllTranstek. Denora is in charge of managing the daily operation in AllTranstek's Houston office. Some of her responsibilities include the supervision of mileage and equalization auditing, as well as performing the audits. Denora coordinates data flow for new customers, as well as performing and supervising the invoicing approval process, assisting with direct reports, in addition to maintaining communications with railroads and customers. Another distinguished transportation expert joining us today is Iris Balmaceda. Iris is a mileage auditor too at AllTranstek, and she's responsible for performing equalization, rental, mileage, and lease audits while overseeing the approval of invoices for customers. Prior to joining AllTranstek, Iris performed contract equalization. Thank you both for joining us today.
Good afternoon. I hope everyone is doing well. First of all, I want to thank you for taking the time to attend this webinar. My name is Denora Guzman, as he said, Car Accounting Manager at AllTranstek, and I've been working for the company for about 12.5 years. Today we will present some valuable information about the mileage equalization process, and then we'll also show you some detailed information on how to avoid equalization charges, which are also known as equalization penalties.
Hello everyone, I'm Iris Balmaceda, and I'm a mileage auditor too with AllTranstek out of the Houston, Texas office, and I've been performing the equalization audit for about 5 years now. Okay, so we'll get started. So this is the agenda for today's webinar. We're going to touch base on each of the topics listed. So we'll start off with a general company overview, as well as what the car accounting department does. Then we'll start with the basics, which are mileage credits or car hire records. That's what we use. We can use either term for that. Then the importance of supplemental files. So what the shipper can send us to help us with our equalization audit. Then we'll go into what the equalization audit process is. We'll provide some sample files, and we'll talk about some common errors or claims that we use in the equalization audit. Then we'll get into a savings analysis as well as ways to save.
Okay, so just to give you a little bit of background information for those who are not familiar with our company, AllTranstek is one of North America's largest rail cars management and consulting companies. Many of you might be familiar with us because we have been managing your cars for some time. We've been in the industry for over 20 years, and we manage over 230,000 rail cars. About 38% of those are tank cars, and 52% hopper cars. Our goal is to continue providing excellent service to our existing customers, and also to those who are willing to give us the opportunity to serve them. As an overview, the main type of services that we provide are railcar maintenance and management, data management by client services, railcar inspections by technical services, and strategic services, just to name a few. Our car accounting department, which is located in Houston, Texas, is a department that I manage and falls under the client services, which is led by our VP of Client Services, Matt Johnson. Our group specializes in the equalization audit process. We also do rate and mileage audits, and we also do lease audits, just to name a few.
So as Honora said, we help with different audits, the equalization, the mileage, and the rental. And we do that by generating claims, resulting in the reduction in charges. So we do that by paying close attention to the movement details, assuring that the records are correct, and verifying payments are processed at the correct amount that we expect. The car accounting group is able to maximize savings for clients. So to put things in perspective, this is how our car accounting group from AllTranstek fits into the big picture. So it starts off with the shippers, and they're responsible for loading the car and generating movement. Then they release the car to the railroads. The railroads then transport the car to the destination. They generate the CLMs, the car location messages, calculate mileage credits, and prepare mileage statements. And then we have RailLink that distributes mileage records and equalization penalties to the car mark owners, as well as the lessors who pass car hire records and equalization penalties to customers and or agents, so that would be us. And then finally there's the shipper and AllTranstek, so we review, audit, and if necessary, we file claims. So we wanted to start off with explaining the foundation of the equalization audit, which are the car hire records. So the definition of that is an accounting record generated by railroads to report mileage activity, commonly known as mileage credits. So we do use both car hire records and mileage credits, but keep in mind, even though we say mileage credits, it's just an accounting record, so it's not necessarily a credit or a charge. It could be either one. So one record is generated for each move on one railroad in 1 month, and then each record will contain the following data that can help us for the equalization audit. So these records together include the car ID, the railroad, the earned date, and the allowed date, which are different. We'll get into that in a little bit. And then it shows whether there was loaded miles traveled or empty miles traveled, and then as well as additional movement information. So all of this together kind of tells us the story of the movements of the rail cars so that we may perform our audit and make the best claim. So here's kind of an example of what the car hire records look like, just kind of like the raw data. So we'll have, like I mentioned, we'll have the customer, the lessor, the owner of the mark, allowed date, earned date, the rail car initial, the rail car number, the rail car type, and then we have the cycle start date, the SPLC, so that's like the city that it's traveling from, and then where it travels to, the end SPLC, as well as the end road mark, and I can't see that last, but and the loaded and the empty miles as well. So as you can see, it's kind of, we just wanted to show the raw data. It's kind of a little bit messy. Someone can't really tell what the movement is. So luckily we have our Fleet Watch EQ program that organizes it so that the auditor can make the appropriate claims. And we'll show you what that looks like in a little bit. Okay, so these are how the car hire records are received. So from RailLink, what they do is they collect, regulate, and distribute the mileage credits. And then the leasing company receives those mileage credits, and they match the dollars paid. Then they distribute the records to its customers. So as I mentioned earlier, so just to kind of give some additional notes, we have RailLink distributes 2 months after the earn date. Leasing companies distribute 3 months after the earn date. We collect all the records regardless of the dollar amount. Payments for mileage allowance comes from railroads directly to the mark owner and or the agent. And mileage credits are a uniquely valuable source of information because they are generated by the railroads and therefore cannot be reasonably refuted by the railroads. Okay, and then these are how the car hire records are used. So through the railroads, they determine how much to pay the owner of the mark and how much the equalization penalty should be. Then through the leasing companies, they provide the credit to the lease invoices and also for equalization and excess mileage computations. And then for AllTranstek, we use car hire records in a numerous amount of ways, but the ones that we want to highlight for the equalization audit, we use to estimate future penalties for equalization, we audit equalization, and then we use the car hire records to estimate and verify the excess mileage invoices.
Okay, so now that Iris has explained what a mileage credit or car hire record is, you are going to see how they play the most important role when it comes to the equalization audit and how we put those records to use. Our process starts by monitoring the monthly car hire data. So, and then we generate reports that tell us when there's an estimated penalty. And these reports are based on the monthly car hire data that we collect for owned and leased cars. So pretty much what you're looking at right now is all the data that we have collected in a monthly basis from the leasing companies and from RailLink. So all this data is being put together, and we, based on the data, we generate these reports in a monthly basis, and we send these to our customers so that they can keep an eye on their equalization penalties. So this pretty much gives them a really good idea of, you know, how much trouble they're in. So pretty much on this specific one, you're gonna see that the own car data is through April of 2017, and for the lease data is through May of 2017. Okay, but before we go into more detail, some of you might not know exactly what equalization charges or penalties are. Okay, so as we know, the railroad's goal is to generate revenues by moving loaded cars. And since empty cars don't generate revenues, the railroads penalize those movements in which there's an overage of empty miles over 106% of the loaded miles in a given calendar year. Okay, so pretty much this is where they make their revenue on the empty moves. And then all of this information that I'm giving to you can be found under the tariff 6007-0. And this tariff stipulates all the details in reference to the equalization computations and what is allowed. Okay. Unfortunately, we often see that the railroads do make mistakes, and they report excessive number of empty miles over the loaded miles. And therefore, we always recommend an audit whenever you see discrepancies, because most of the time, they won't fix those mistakes unless we file a claim. So just to give you an idea here, this specific customer has about $42,000 worth of penalties in the U.S. Okay, if you can go back to the other. Okay, so pretty much this report is broken down between U.S. and Canadian equalization. On this specific page, we're looking at the tank cars on the CPRS. This is Canadian equalization. We all know, or I don't know if you guys know, but the equalization is in the United States and Canada. In the United States, there's only equalization for 10 cars, and then in Canada for both 10 cars and hopper cars. Okay, so pretty much on this specific example, this customer here has about an estimated penalty of over $300,000. Okay, and this is only through April, as I mentioned earlier, for the own data, and through May on the lease data. So pretty much, well, I would definitely recommend this customer to do an audit. Okay, so once we have determined that there's an equalization penalty and an equalization audit is needed, Besides the car hire records, we also ask our customers to send us records that will keep, that will help us recover the maximum amount of savings. Some of the important files that we need are any records of empty freight payments. So if the customer has paid for empty freight, we would need those records to show the railroads that an empty freight payment has been made. And because of that, they should not include those records in the equalization computation. So they can either do one or the other, but not both. Another important type of file would be the movements to shops, especially those for regulatory purposes. Not all railroads, but some railroads do make adjustments for movements to shops due to regulatory purposes. Another important one would be movement to storage, and also cars going in and out of services or cars being remarked. These type of claims, we don't file against the railroads, but we do it for informational purposes to the customer. So we label them as claims, but we show the customer if their cars are going to shops for cleaning purposes, or the cars are going to storage. So pretty much, but we will cover those in more detail.
So the supplemental files that Denora was speaking about, that's in the beginning of the equalization audit process. So to show our point of view of beginning to end of the equalization process, we first receive the car hire records, which we then analyze, and we get that from the car hire data exchange. So after we go through the audit, we start filing the claims against the railroads. And then once those claims are all made, we work with the responsible parties to adjust the bills to make sure that it's what we're expecting to see. And then finally, we verify equalization invoices for accuracy, and then we pass those invoices along to the customer and verify, if they were correct or not. So these are the most common fileable errors, and just so you guys know, so it won't be confusing. So we call them errors, but they can otherwise be known as claims. So they're claims against the railroads. So specifically, fileable claims are a type of claim filed against the railroad in which the railroad is expected to make adjustments. And so these are a list of the most common ones. So by far the most common is error D, which is circuitous routing of empty moves. We'll see an example of that. Then we also have error C, empty mileage payment errors. We usually like those because they yield the highest amount of empty miles, so that's always good when we're making claims. We have loaded mileage payment errors, which is an error B. We have revenue move, freight paid, an error R. So Denora kind of touched base on that about how in the supplemental file, if we get records of when the freight was actually paid, it can help. It helps us make the proper claim, and so then we can expect to see adjustments from that. And then our next error is movement to shop for regulatory reasons. And then finally, we have errors that it involves the U.S. and Canada. So as you can see, we have either loaded in Canada and it was empty in the U.S., or it was loaded in the U.S. and it was empty in Canada. Okay, so now Denora is going to talk to us through some examples of these fileable claims.
Okay, so what we're looking at right now is the data that Iris showed earlier, the car hire record, but now you're looking at it in a different screen, which is in our equalization program designed by AllTranstek. So as you can see, this is more legible, it's easier to understand. So the SPLC codes have been transferred into city names, and then it shows the loaded miles, the empty miles, and it shows the date. So pretty much this is what the auditor is looking at. Okay, so we review the records one by one. In this specific case, what I was talking about earlier, the customer provided the empty freight payments. So we're able to take all the empty freight payments that the customer paid and we load them into this system. Okay, this way, if we find that the customer paid freight, but the railroad did not exempt the records from equalization, we file a claim. So in this example here, it looks like the CN was paid empty freight for going from Port Huron, Michigan to Rainier, but for some reason they didn't exempt those records. So because of that, the customer would have had an extra 932 miles. So once we file the claims and the railroad review the claim, I'm not sure if you guys can see, but on the top of the screen, you can see that the railroad allowed the claims. Okay, so in the little Excel access file there, you can see that they allowed 932 miles. So this is the perfect example that if we didn't know that the customer paid freight for these cars, we wouldn't be able to file the claim. But because the customer supplied the information, we were able to file that claim, and the CN adjusted the mileage by 932 miles. Okay, here's another example of another revenue an empty freight payment. And the reason that I like to emphasize this type of claims or this type of errors made by the railroad is because they cannot do both. Okay, so if the customer pays empty freight, they should definitely exempt this from equalization, but they don't always do. Okay, so by the customer supplying these files, they will definitely adjust the mileage. Okay, so an example of, I don't know if many of you are familiar, but an example of an empty freight payment would be when an empty move follows a loaded move, the customer does not pay freight, but the second empty move will be charged freight. So if a rail car goes to a shop after being returned to the plant empty, the customer pays freight, but those mileage, the mileage should be exempted from equalization calculations. Another example would be if the rail car is moving to a shop immediately after a loaded move, then no freight is paid on that. But the customer and the empty miles will be included in equalization. But if the car moves back from that shop and back to the plant, the customers pay freight, but then those miles should be exempted from equalization. So in general, anytime that empty freight payment is paid, the railroads should exempt those mileages from equalization, but unfortunately, they don't always do that. We see examples where, the customer did pay the freight, but the railroads did not exempt it. This is the example that you're looking at right now. So if we hadn't done this audit, the railroads would have not only charged the freight, but they would have also included the mileage in the equalization penalty. Okay, here's another type of claim which is very common. This is the empty mileage payment error. Okay, in this case, the rail car went from Baytown to Houston, loaded, and then from Houston back to Baytown. As you can see there, the UP reported 1,660 miles from Houston to Baytown. Okay, I know definitely it's not 1,660 miles from Houston to Baytown. We actually have employees that live in Baytown, and I'm sure they don't travel that much. So as you can see here, the difference is over 1,600 miles. So if you do the math times 92 cents, which is the rate for the U.S. equalization penalties, this trip right here would be about $1,631 that the customer would have paid. Okay, now here we have a loaded mileage payment error, which is kind of like the opposite of the previous one. And this is also very common. They do the opposite. So this is either when the railroad does not report the loaded part of the trip, or they don't report enough loaded miles. So in this specific case, you see that the rail car moved from East Billings to Laurel, and then it just jumped, like between Montana and Texas. So we have Laurel there, and then all of a sudden the car appears in Brownswood, Texas. Okay, so obviously there's a problem there. Okay, and that, as you can see, the BNSF did report the empty side of it from Brownswood to Laurel, but they never reported the loaded side from Laurel to Brownswood. Okay, so that's 1,545 miles. If you convert that into dollars, it's about $1,421 just for that trip right there. Okay, so if we didn't have a way of looking at the data and analyzing the data one by one, we would not be able to see this. But as you can see, the auditor caught it, and we filed the claim, and the BNSF made the adjustments to that claim. Okay, now here we have a different type of error, which is very common in when rail cars travel from the U.S. to Canada or from Canada back to the U.S. Okay, in this case, what you see is that the car moved from Sarnia to Port Huron in Michigan, and then when they crossed to the United States, they did it through Port Huron in Michigan. So they went through the United States, but then on the way out of the United States, they crossed the border to Canada in Rainier, Minnesota. So because they use a different border crossing, they there's extra empty mileage on both the U.S. and Canada. So as you can see, there's from Sarnia to Port Huron, there's only 3 loaded miles. But then on the empty side of it, it's from Rainier to Sarnia. So because it crossed again, because it crossed on a different border crossing, that accumulated more empty miles on the empty side. And then the same thing in the U.S. We have the CN there with 108 miles from Port Huron to Airline Junction, but then on the way back from Airline Junction, they cross to the other side of from the U.S. to Canada through Rainier, and because of that, there's 975 empty miles. So the good news is that we were able to find this type of discrepancy, and we filed the claims against the CN, and CN was able to make the adjustments. So this is a type of claim that, you know, we have our auditors make sure that they check anything when it that has to do with border crossings, because the CN will fix these claims. So that's a perfect example of Canadian penalty, and that's one of the reasons why a lot of the customers are paying or have problems in Canada because of the different border crossings. But again, the good news is that we're able to identify those type of errors and we're able to file them.
Okay, so that was a few examples of the fileable claims. So again, those are claims made against the railroads. But now we're going to get into a different type of claim, which are unfileable claims or errors. So this is a type of error which it's not filed against the railroad, but is labeled for informational purposes to the shipper. So in other words, these are claims railroads do not see. And oftentimes we've heard from our customers that they use these unfileable claims to analyze, you know, what they can do next year to minimize penalties. So these are the most common unfileable errors. So the first one is repositioning of cars. That's when it's going from one plant to another plant. Then we have shop moves for non-regulatory reasons, so cleaning, stuff like that. So, and then we have to and from storage. Then we have circuitous routing using different junctions or railroads. And then we have subleases. Okay, so here is an example of a repositioning of a car. So kind of looking through, we see that it starts in Pavonia, New Jersey, and it travels to Selkirk, New York. So then once it leaves Selkirk, it goes back to Eldon, Texas. So in this specific setting, Pavonia, New Jersey, and Eldon, Texas are both plants. So we see that the car is just ultimately just it went loaded, but then when on the way back, it went to a different plant, and that's what kind of racked up more of the empty miles for that. So, and I apologize, the storage note, it can seem a little bit confusing, but that storage note would not apply to this move. So again, we have the auditors, trained to see what event notes match up to what moves and what would be the appropriate claim to make. This next example is a shop move claim. So this would be an error A, I believe. So we have Gregson, Texas, which we have listed as a shop for this customer. And then it leaves Gregson, Texas, all empty miles, and it goes all the way back to Sarnia, Ontario. So the miles that it racks up in the U.S., which is about 1,200 miles, we mark that as a shop move claim. And again, the customer can see, whether this move was absolutely necessary and if this route was necessary. And if not, they make the appropriate changes to minimize their penalty. Here is an example of another shop move. So this one is going from East Billings, and the shop here is Evanston, Wyoming. So it goes there, and it stays there for a couple of days, and then it goes back to Laurel. So Laurel and East Billings are essentially the same. So we see that it's going back and forth to the shop, and then it goes back to Laurel. And so, and like I said earlier, so we have the events up top. And just so you guys know, so the supplemental files that we receive from the customer, that's what populates this area under the events section. So with the help of the customer, we saw that, we have a shop event note, and it does apply to this move. So we go ahead and add it to the top where you see shopping, valve, BOV, tank. And so when we file this claim, the customer will be able to see what the movement was, as well as the empty miles, and then the shop note that applies to that. Okay, so now here is an example of a to and from storage. In this case, it's coming from storage. So kind of like a shop claim, it's traveling all empty miles, and it's coming from a storage, and it's going to a plant, which is Baton Rouge. So we mark all of the lines to show the big picture to the customer. And this one doesn't have a storage event note, but because of our list of storages, plants, shops, etc., we can tell that this was a storage move. So, but it's just helpful that once we do have that supplemental file showing that, there's a storage note, it's kind of even more assurance that that's what it truly was. Okay, so now the penalty invoices come into play, and that's after we perform the equalization audit and the customer starts receiving those. So just a note on that, car owners are responsible for paying any penalties on cars they own. However, most leasing companies pass the penalty to lessees based upon their utilization. Some lessors only charge lessees if the lessors receive a penalty over all cars, but some see equalization as a revenue opportunity and bill based upon utilization whether or not they received a penalty themselves. And so sometimes we see that when there are penalty invoices for the customer, there can also be a kind of like a group discount from the leasing company. So again, these are just kind of things like we see once we receive the invoice, we verify what the penalty is based off of the mileage itself. And then we can see if there's any discounts added and if it's along the lines of what we were expecting. So to kind of start talking about timelines, technically the customer only has until March 31st of the subsequent year to report errors to the railroad, which is difficult since full information is not available until late March. So Raillink bends the rules a bit to accept adjustments from the railroads until May 20th. Once the bills are generated in July, however, there is no chance to modify them. They must be paid in full. Even when adjustment deadlines are missed, they should be pursued because any adjustment to a prior year after May will apply to the current year. Do you want anything to that, or is that okay?
No, that's fine.
Okay. Okay, so then kind of shows the deadline again, the March 31st to file the claims, and the deadline of May 20th to make adjustments. And then kind of showing the timeline again, that it starts with railroads, that they create the mileage credits, that it goes through RailLink and the leasing companies, so they bill the customers for either the own marks or the lease cars, and then the customer receives the equalization penalty invoices, and this would be the time that they forward it to us, and they make sure that, you know, it was something that we were expecting to see. And so we verify that the equalization invoice is correct, and if it isn't, you know, we make the appropriate actions to either adjust the bill or figure out why the bill looks the way it does. So one thing to mention when it comes to penalty invoices, we have this thing that we call the combination effect. So when two sets of cars independently calculate equalization, the total result will be the same or greater than if it was calculated as one set of cars. So if you own two reporting marks, make sure RailLink combines their numbers before computing the equalization penalty, so it'll help. Leasing companies should combine all riders before calculating their equalization penalties. And if the sum of the customer's equalization penalties is more than the penalty the leasing companies pay, a fleet discount should be applied to equalize the customer's total penalties in order to ensure a fair pass-through. So these are kind of the things that we look out for when we receive the equalization estimate report. We make sure we see what the parent marks are and the child marks are and make sure that those are combined. But, you know, as a customer, you can make sure to I guess, go to RailLink and have that under one mark. So it would provide the greater amount of savings possible. So as Denora mentioned, we have, and I guess I'll show both, yeah. We have U.S. equalization and we have Canadian equalization. So although both countries have their equalization, there's, you know, slightly different rules. So as Nora mentioned before, in the U.S., there's tank car movements only. That's, let me reword that. There's only equalization for tank car movements. In Canada, there's tank car and hopper car movements. And then, so in the U.S., it's all the railroads, and in Canada, it's CN or CPRS only. And then in the U.S., for all the railroads, there's a 92-cent rate per miles. And then for Canada, depending on the railroad, if it's CN, it's $1.05. If it's CPRS, it's $1.10. And this is for 2017, right? These are the
Actually, in 2018 is when the 105 is going to be effective for CN. As of right now, it's $1.
Okay.
2018 is going to be $1.05.
So each year, you know, it changes, but, you know, we keep on track of that.
It might change, but it doesn't always.
So to kind of show the breakdown of the penalty calculation, this is what it looks like. So we look at the total empty miles, then we look at the total loaded miles, and we multiply that by the 106%. Then we subtract the loaded from the empty. The loaded after the 106% is multiplied. If it's negative, then there's no penalty, of course. If it's not negative, then we apply the rate to that number. So whether it's in Canada or U.S., in this example, it's 92 cents. So this is U.S. equalization, and then that comes up with your penalty. So so that's how we kind of get a rough amount of what we should be seeing, and then after that, we could see a possible fleet discount, and then ultimately you'll have your total amount due. And I think, yes, okay, so just to show an example, so in this scenario, there's 10,000 empty miles for this customer, and then they have loaded miles 7,500. So after the 106%, it's $79.50. So taking the loaded minus the empty, we come up with $2,050. It's not negative, so there is a penalty. So in the U.S., this would be, so after the 92 cents, it would be a $1,886 penalty. So this is a sample equalization invoice, and this, I actually approve this one. So, so this is something that we receive, we look at, and as you can see, it's kind of like the breakdown that I showed earlier. So we have total loaded miles, total empty miles, then we have those loaded miles times the 106%. So then we see the excess empty miles, and then this was in the U.S., so it's times the 92 cent rate, which comes up with a $220,000 bill. But then after the discount that they added, we're looking at roughly a $150,000 bill. And now here is a sample equalization statement from RailLink. So we get this on a monthly basis. And oftentimes we can kind of monitor and see what, from year to date, what the miles are, and the loaded miles, the empty miles, and if there's any adjustments that have been made. So this one that we're looking at, there's a $0, but this is only through May of 2017, so it can definitely change. And now, so this is the fun part. We see the claim summary, which shows the savings. So in this specific scenario, we saved this customer close to $1.1 million. So this kind of shows, like, not only, so if it's coming from a leasing company or if it's an owned car, what the rate was. So 92 cents is in the U.S., the dollar is CM, and $1.10 is CPRS. Then it shows our filed miles, so what we actually claimed, and then from that, what was adjusted by the railroads, and they're either adjusted through car hire or through ER1, and then finally, so what the total miles, the total adjustments were, and then we translate that into what that is in dollar amounts. And so, and this is actual statistics of different customers that we've had. So the blue is what their penalty invoice looked like before the equalization audit that we performed, and then the green is what it looked like after our equalization audit. So for some customers, they had an equalization penalty, and after we were done with our audit, it was completely wiped out. And for some, there was just like a significant amount saved. So.
Okay, so in conclusion, as we learned in the examples that we gave, it is extremely important for the shipper to keep records of all the empty freight payments. If those records are not being kept, the railroads might include the records on equalization calculation, and we don't want that to happen. So it is extremely important to maintain records of all the empty freight payments. The other thing is repositioning. They play a huge role when it comes to the equalization penalties. So we recommend, if possible, that you might want to avoid sending the rail car from the destination where the car is being unloaded to a different plant. The reason being because one of the plants might be in Texas and the other plant might be in Canada. So that's going to accumulate an excess amount of empty miles. So you want to make sure to check on that. The other one would be movements to shops. This is very important because the rail cars are always going to shops, either for cleaning purposes or for regulatory reasons. So one of the things that we recommend is that if you're going to send a car to a shop, always consider not only the distance to the shop, but also the route, okay? Because you don't want to end up paying freight to another railroad if that rail car is already on the route of a different one. So, for example, if the rail car is on the UP and then you're going to have to transfer it to the BNSF to go to a shop, then you will have to end up paying freight to the BNSF. Another thing is to find a shop that can do both. So I know that that's easier said than done, but there's a lot of shops that can do regulatory repairs and then at the same time do some cleaning. So that's one of the things that we recommend because we see that a lot. We see cars going to shops for cleaning purposes, and that accumulates empty miles, and that's all they do, they just clean it. Or we see cars going to a shop that is way out of route. And when that happens, of course, it's going to accumulate the empty mileage. Another thing that is very important is to monitor the activity of your rail cars. So that's the reason why we generate the equalization estimate report. And we provide that to our customers on a monthly basis so that they can see what's happening and they can see, pretty much have an idea of what kind of penalties to expect, and maybe keep an eye on the repositioning, movements to shops, and all kind of activity made by the rail cars. And again, in car accounting, that's what we do. We collect all this data and we keep an eye on everything, and we inform the customer if we see that the penalties are increasing month by month. Okay, so, and then definitely the last one, but definitely not the least, if you see that there's a potential penalty and it is really high, we recommend that you do an audit. Okay, because I know a lot of the customers, they hesitate, they don't want to do it, they don't want to sign up for an equalization audit, thinking that maybe at the end of the year the penalty is going to go down, or thinking that they can negotiate with the leasing company, or it's just maybe it's not in their budget. But at the end of the day, the audit definitely pays off. We have a lot of customers that have penalties of over $600,000, and we were able to wipe out the entire penalty. So we always recommend that if you keep track of your movement, and if you keep track of the estimated penalties, and then you see that it's getting towards the end of the year and that equalization is not going down, it is best to sign up for an audit. And, that way we can file the claims on time, and we can, follow up with the railroads to make sure that they make all the adjustments, to the extra empty mileage. But anyway, those are some of the recommendations that we have. Thank you so much for being here with us today. And Iris and I will be happy to answer any questions that you guys might have.
Thank you, Denora and Iris. And now is the time that you get to ask your questions as the audience. You can simply type your question into the question pane on the GoToWebinar sidebar, and I'll then moderate those questions for our presenters. So a first question for you is there a timing season or a deadline that I have to be aware of in the mileage equalization project?
Yes, that's actually a good question, okay, because right now is the perfect timing. The reason being is because we receive the car hire data 3 months after the fact. So pretty much in the month of September, we're receiving the data for the month of June and on lease cars. And on lease cars, and for the month of July on own cars. So what we do, we split the audit into 2 sections. We do the first half of the year, so we do the audit based on the data from January through June right now. And then we do the second half of the year, which is from June through December, around March or April. So pretty much this is the time, if you see that you have a high penalty, this is the time to sign up, for an audit, because we will have to collect not only the car hire records, but also collect all the events, any empty frame payments or any moves to shops. So right now, between the months of September, October, and November is the perfect timing to sign up for that.
Okay, one other question. As a tank car owner, why is mileage equalization important to me?
Okay, well, as Iris was mentioning on her, she was talking about the Canadian and U.S. penalty. There is U.S. and Canadian penalty on tank cars. For hopper cars, it's a little bit different because it's only in Canada. But in the U.S., there's penalty for both. In the U.S., there's penalty only for tank cars. So as a tank car owner, I would recommend to keep, an eye on the movement of the rail cars, and make sure that if you do see that there's a high penalty, to sign up for an audit, because there's definitely going to be a penalty, since there is a rule when it comes to tank cars and penalties in the U.S.
All right, thank you. I'm going to look for a couple other questions here, and if you have any, feel free to type them into the question pane there on the GoToWebinar sidebar, and we'll try and answer as many of those as we can. Hold on just a moment.
Okay.
All right, while we wait to see if we've got any more questions that come in, I'm going to remind everybody that the video replay will be available on Friday, October the 6th, and once that replay is available, an email will be sent out once it's ready. Let's see, and looks like we have a couple questions here in the queue. Let me get those pulled up. There we go. Car hire credits. What exactly are these, and what events prompt railroads to provide credits back to the car owner?
Oh, sure. I'll answer the first part. So the car hire records or mileage credits, we receive that from, well, first it starts off with the railroads and then it goes through RailLink, but we receive that. And that's just, it's broken down movement by movement information that the rail car travels. So kind of like in the beginning of the presentation, I showed what the raw data looks like and the different fields that it holds. So some of it being the car ID, the SPLC codes, the time of the year, etc. So we get those, we collect those for each of our customers. And then once a certain amount of time passes by, we load it into our FleetWatch EQ program. And when we were looking at the different types of errors, that's how we see it on the screen. So then it's a lot cleaner version, and where it starts with loaded miles, it ends with empty miles. We can see the SPLCs translate to the actual cities traveled, and so we make the appropriate claims from there. So that's kind of what the mileage credits are. What was the second part of that question?
The question was what exactly are these, and what events prompt railroads to provide credits back to the car owner?
Oh, okay, so not to get confused, they're called mileage credits, and we get this pretty often, but they're not necessarily credits. And for the equalization audit, it's only to provide the loaded miles and the empty miles. So again, just to kind of repeat myself, for the equalization audit, so just for, we perform different audits, but in the sense of equalization, it just provides the loaded miles and the empty miles. So there's not, a credit or a charge or anything. It's just showing the mileage. And sometimes there'll be adjustment in the miles, but, we'll look at that and we'll compare it.
Yeah, so pretty much when it comes to equalization purposes, we're looking at the loaded miles and the empty miles, so the number of miles. But the car hire records contain more than that. Mm-hmm. So there is a dollar amount, but that is that's what we call the mileage audit. That's a different type of audit that we do to make sure that the railroads are actually paying the mileage, giving mileage rebate to the customer. But when it comes to equalization purposes, we just look at the number of loaded miles and empty miles.
And that's why those terms are interchangeable, and actually we like using car hire records, the term car hire records, because then it's not so confusing, whereas a mileage credit sounds like it's an actual credit when it's not always the case.
All right, another question. Are out-of-route empty miles claimable for RR adjustment?
Yes.
Yes, definitely. Mm-hmm. So what we do, again, we check these records one by one, and if we see that there's a car going out of route, number one, we check with our customer. So if we see that a car is way out of route, okay, we will check with our customer to make sure that it's not something that they requested the railroad to do. Okay, if it wasn't requested by the railroad, by the customer, we'll go to the railroad and we'll file a claim. So that's something that we're always looking out for, to make sure that the car didn't go out of route, either by the customer's request, or if it's something that the railroad just did for whatever reason. But yes, those are fightable.
And even then, if the customer did request it to go that way, we always check the mileage reported as well, because sometimes there'll be an overcharge on those miles. So in one of the examples we saw, what was it, like Houston to Baytown, they were claiming 1,500 or 1,600 empty miles. So we saw that that clearly wasn't the case, and we made the claim against it. So it's kind of a case-by-case basis, but yeah, most of the time those can definitely turn into filed claims, which then turn into adjustments.
All right, another question. BNSF and UP are charging empty moves to from the shop. How does AllTranstek audit this movement?
Okay, so I mentioned this tariff 6007-0, and pretty much on that tariff is a little confusing, and I even talked to the American Association of Railroads. So pretty much when a car goes to a shop due to regulatory reasons, the UP will not make adjustments to that claim. Pretty much what they say, that they're covered by that tariff, and they don't have to make adjustments. But the BNSF, on the other hand, they will make adjustments for any cars going to a shop due to regulatory reasons. So pretty much what we've been seeing is that UP is not wrong, and that's pretty much what the AAR mentioned, that they're not wrong and they are covered by the tariff. So they pretty much said if the railroad wants to allow that's because they choose to, but they don't have to. So, and again, when we see a regulatory movement, we do file the claims. So the BNSF, we know they will allow, the UP won't. So if we see that a car went to a shop due to regulatory reasons and it falls on the UP, we try to find a different type of claim. So pretty much if we see that the mileage that they reported is kind of high, we label that as an empty mileage payment error as opposed to a regulatory move, knowing that they will not make adjustments to a regulatory move. So, at the end of the day, they are covered by that tariff.
And something I wanted to add, just to kind of just to throw that out there. So we have auditors that we look at this year by year, and we see the whole process. So everything from receiving the mileage credits to making the actual claims to seeing what is adjusted by the different railroads. So we start seeing different trends, and we see, what railroads tend to accept what. So oftentimes, sometimes, like, there'll be, a kind of a movement where it's up to the auditor's discretion on how they want to make the claim. So because we know the different tendency of the different railroads, we try to make the appropriate claim to, to maximize the client's savings. So just throwing that there.
Yeah, and I think one of the things that I would like to mention is that we have a really good working relationship with the railroads, and many times they will help us, whenever we have questions about different scenarios, they pretty much will tell us, okay, if you file it this way, we can allow it, but if you file it a different way, we won't. So believe it or not, they're not always, the bad guys, they always help out. We went and visited the CN recently in Canada, and they were extremely helpful, and they gave us some tips, on how to maximize savings for the customers, believe it or not.
All right, well, that concludes our time that we've got for question and answer. Thank you very much. As a reminder to everybody, the replay will be available on Friday, October the 6th, and an email will be sent out once it's ready. Please don't hesitate to follow up with Denora or Iris or anybody at AllTranstek or the FTR team if you need anything. Thank you, Denora and Iris, for joining us today, and thanks so much for everyone for attending. I hope you all have a fantastic day, and we'll see you next time. This concludes our webinar.
Thank you so much.